From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 20th, 2017. Today we're going to be taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. Before I begin today's trade analysis, it's important to note the historic nature of today's events, the inauguration of our next president here in the US. Of course, maybe not volatility today, but over the coming days, as policies are put in place, as economic information is being submitted, we of course want to be sure to use appropriate risk strategies because there could be unexpected volatility in the market because of all of that new information that we'll be getting over the next coming days. Diving in here to the Australian dollar, we're looking at the daily time frame. A couple of observations here on the daily chart. First off, we're in an uptrend. The blue trend line shows us that the market's been moving up. Since mid to late December, we've been moving up from the lowest low on the chart into the upper 7100s, currently challenging the 75, 65, 75, 70 level, the yellow shaded area up here towards the top of the chart. So an uptrend along the blue trend line. We also, over the past few days, have observed the Forex Black Book change from red to green, giving us a shift in momentum. It was a bearish momentum with red, and now it's gone green, showing us a shift in momentum. Not only that, over the past 3 or 4 days, we've seen the market push above the 100 period simple moving average that we have here on the daily time frame, sitting right around the 7,500 level. Again, right there at the green shaded area where the moving average is, we also note, of course, that 7,500, 7,500 level, the 00 significant price level there as a support, now sitting on top of it. We go back in time just a little bit, and the black circle here shows us historical resistance around that same area. So we know that historical resistance can offer us a clue to support. So we have a lot of information showing us support at the green shaded area and the fact that we are in an uptrend. So if we're going to trade this, it makes the most sense at the current moment to buy it in the direction of the trend when it reaches into support. And so that means as close as possible to the 7,500 level makes the most sense. Sitting on top of the moving average, on top of the trend line, on top of the support, historical resistance. We also have some Fibonacci in place there around the green shaded area. 50% of the long downtrend from the highest high down to the lowest low sits just underneath the green zone. 618 of that same range sits at 75.40 just into the yellow shaded area. Let's take one more Fibonacci retracement. Let's go from the lowest low on the chart all the way down here at the bottom of the trend line and go to our current high, which happens to be today's high, and the 236 fib of that range sits at 74.87 right there into the green zone. So now we have another reason to expect potential support there into the green shaded area. So if we're looking to go long and buy it, that makes a lot of good sense with our risk underneath the green shaded area. Of course, we're not there right now. The current market price sitting somewhere around the 75.30 level. It would have to drop at least 30 pips or so, 30, 35 pips to reach that green shaded area to become a trading opportunity long in the direction of the trend. The next opportunity to go in the direction of the trend, of course, would be the breakout back above the resistance. Currently 75.65 holding resistance, not too hard to see that. It's going to be an imperative that it breaks above 75.65 before we'll look for the next phase of the uptrend here for the Australian dollar. Now, for those of you that are looking for the return of US dollar strength, well, at least at this point, we have not seen it. The US dollar has been kind of slumping, getting a little lower over the past several days. Could it continue? Sure, that's possible. Could we see the dollar come back? Sure, that's possible as well. So we want to watch for evidence of that. At least right now, we do see resistance into that same yellow shaded area that we listed. The yellow zone is 75.40 up to 75.65. So currently 1, 2, 3, 4 days finding resistance there. Again, a breakout above it goes higher. Staying underneath it has potential to at least dip down to the green shaded area that we've already listed out as our current support. And of course, we look for reversal. We look for a change of the trend and momentum if the market breaks under the green shaded area, under support, underneath the 100 period moving average, breaking maybe through the blue trend line, becomes our opportunity to look for reversal. So at least at this point, the trend is up. That's going to be our focus. Take it down here to the 4-hour time frame. It doesn't really change any of that analysis. We just see some more detail about what's been happening over the past several hours, several days. We do see a pretty significant pull back here for the Australian dollar from the highs, coming back underneath the orange shaded area. So at least at this point, like I said, if you're a seller, if you're looking for a return of US dollar strength, then you're looking for the yellow shaded area to continue to hold Sells into that yellow zone with your stop loss above it are probably going to be most important if you're looking to go short into the yellow shaded area. And again, if you're looking to go long, try to get as close as possible to the blue trend line, 7,500, the green shaded area. Those become opportunities in the direction of the current trend for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.